Welcome back to the Stablecoin podcast. I'm Luther Midday here with my co-founder Rami Soleiman, and we are co-hosts on the Stablecoin podcast. Today we're super excited. We've got an amazing guest for you guys. It's Gabriele Galli, SVP of Sales and Partnerships and Business Development at Mesh. Mesh is building the connective layer that lets anyone pay with any crypto asset while merchants settle instantly in stablecoin of their choice. Today, we're getting into what it takes to win the payments infrastructure race and what the BD playbook looks like at the layer nobody sees. And that's why we have Gabby here to explain what that actually looks like. Gabby, welcome to the show, my friend.
Appreciate it, man. You're hired. That was a great pitch for Mesh. So
On that
let
note, we
me
should
know
just
if you
end
want
the
to join the
podcast.
team.
Yeah. Thank you so much. Yeah.
If you want a side gig, let me know. That was great.
Sounds fantastic. Lovely to have you. Like we've been talking for quite a while. And before we jump in, huge congratulations to what you and BAM have built with Mesh. Congratulations on the huge raise. So many congratulations in order. But, I think the thing that a lot of people don't realize is you guys truly live to the sense of the word that you guys built, which is you're absolutely building this connective tissue on the back end of payments that really does a great job of incorporating digital assets while not making it where somebody has to remember a wallet address, and that's where we're all kind of driving towards, and you guys are kind of leading the charge on that. And so thank you for doing that. But more importantly, how did you end up in this space?
Yeah, appreciate it, man. Thanks. And yeah, you and I go way back. I think it's definitely been a couple of years. We might have still been called Front Finance when you and I initially connected. I know you were over at MoneyGram, but it's been a long journey up until now, and we got a long journey ahead. It still feels like we're just getting started. So happy to dig in more. I think in general, there's still a lot of fragmentation, and there's a lot of work to do in order for us to get that full network effect and fulfill the vision that we have. How did I get into the crypto space? I think that's always an interesting question to ask all our colleagues. I kind of got in it just out of sheer will. I've always been entrepreneurial, and I found myself in my 20s when I started my professional career. I was reading a lot of books around entrepreneurs that took advantage of the internet. And that was the emerging technology in the 90s, early 2000s. And, I would read about, the Steve Jobs of the world, or even, around about Elon and PayPal, and like their journeys. I worked at a couple startups within like the e-commerce space, or like SaaS businesses that were tailored towards e-commerce businesses. And then I had a few friends that were very successful around what you want to call it, like the e-commerce boom, right? And so like I was really seeing the effects of entrepreneurs that were capitalizing on the emergence of this new wave of adoption around, buying things on the internet. And so I kind of thought to myself, okay, the next 10, 20 years, what do I think is going to be that new wave of tech? And this was like around 2018, 2019. And I had been buying Bitcoin. I'd been, you know, trading for a while, and I had some friends that were very passionate about Bitcoin and had mined it, and so I went, I went down a lot of the different rabbit holes that I think we all did, and like
Mm.
read the white paper, and it was pretty clear to me that Bitcoin blockchain was going to disrupt the global financial system, and that everything would eventually move on chain. That this would change how the world thinks about commerce and how the world thinks about money movement and the interaction of money. And so I was like, I need to do something about that, and I need to build it. So I quit my job and started a company called Dorado with a couple of my friends, and we were essentially a crypto bank. And we really wanted to allow people to invest in crypto, invest in Bitcoin through different types of investment vehicles like IRAs or 401ks. And when I was running that company, I met Bam, who's the founder of Front Finance, now Mesh, and we became friends. I exited Dorado, and Bam asked me to join and run the commercial side of the house. So been doing that for the last 4 years. So it's been a wild ride.
That's amazing. When it comes to the protocol that Mesh is, one of the biggest challenges is that there is no shortage of fragmentation still in the system, right? There's tons of assets sitting across tons of chains. How does Mesh, how do you guys kind of balance all that and make it seamless?
I mean, that's a great question. That's like what I think like we strive for and work on every day as an org and as a product team. Like just crypto's very fragmented. Even like our traditional financial system globally is very, very fragmented. And so what like what we're focused on doing is making it simpler. Like when we talk about like the grandma test. So like that was our initial thesis of right now it's very scary for anyone that isn't a crypto bro to like actually interact with crypto and like having to like have all these different wallets, um, scanning QR codes, copying and pasting long wallet addresses, having to platform switch. So we created a product that really simplified a lot of that and made it what some people call like a plaid-like experience, as an embedded experience, where you could easily just connect different accounts. Um, Now we're really thinking like, how do we go beyond that? And just simplify money movement across different assets, different chains. And also, how do we plug in the traditional finance systems globally, so that if a company or a person wants to move money from point A to point B, whether that's U.S. dollars, whether that's USDC, whether it's Ethereum or whether it's pesos, they can do that. And stablecoins really do sit in the middle of that. And we leverage all the emergence of stablecoins and all the tech around that to simplify money movement.
Could I ask a quick question, Gabrielle? So how much of your business now is stablecoin oriented, and how much was the original thesis of getting your customer base to simplify the usage of just getting into Bitcoin and investing into Bitcoin? What's the split?
Yeah, that's a great question. Right now, I'd say the majority of our business has to do with stablecoins in some way. um, Whether that's a stablecoin sandwich use case, right? When you're getting fiat, converting it to stablecoins, and then landing it somewhere else and converting it again to fiat. Whether it's having to facilitate a transaction and then settling that transaction in a stablecoin, or just dealing with stable to stable flows. It's like the vast majority of our business is around that. We do work with platforms where we're just powering, their overall deposits, and they accept a variety of different cryptocurrencies. But the stablecoin volume continues to grow.
No, that's expected. That's great to hear. Uh, I guess a follow-on question from this, and you described very eloquently the stablecoin sandwich and the difference sort of stable to stable and fiat on-ramp, off-ramp. You become more of a regulated fintech doing this stuff. So how much of the business that you do is split between sort of almost regulated activity, quasi-banking activity, and sort of fintech SaaS solutions, like B2B, B2B2C style? How do you split your business that way?
Yeah, that's another great question. Look, like the regulatory framework, globally, especially around stables and money movements, quite dynamic. So we've kind of taken like a multi-step approach where um, we like our core tech is tech, right? Like it's API integrations. That's our core technology. So like from a technical standpoint, we aren't touching assets. Assets are moving on the blockchain. It's not meshes Rails per se. We've just built integrations and connectivity to be able to facilitate that. Um, Over time, as we've gotten to become more of like a crypto infrastructure provider and work with some of the largest enterprises in the world to help them power and build out capabilities around, blockchain and stables, there's been requests for, can you off ramp this in Brazil, right? And so like maybe you need to support PIX, and then you need to have like the correct regulatory framework in Brazil, or like the EU, or the UK specifically, or the US. That's where the initial step there is we find partners to partner with to be able to fulfill those demands. And then once the business case gets large enough, we evaluate like what's actual investment needed and what's the ROI on that investment. And that comes, of course, first and foremost from a compliance perspective of, do we have, the right framework and the right licenses to be able to do this correctly, but also from a tech perspective as well, because it's not trivial to build out all these different rails and connectivity globally. They're all different systems. They all work differently. I think there's what we've found out is there are a lot of companies that advertise that they do a lot of this, but then once you get into the actual nitty gritty and you look at all the piping and plumbing, it it's still not fully built out yet. And I think like from a coverage perspective, specifically for on and off ramping, where you need a lot of that licensing framework, it's good, I'd say, in like some countries in the EU and in the US, but the rest of the world, there's tremendous opportunity to like really build that out.
That's great. Great answer. Thank you.
As the convergence continues to happen, Gabby, like adoption is huge, right? We're sitting at like at I want to say 27 trillion in volume for like over the past 12 months, in stablecoin volume, which is a very non-trivial number if you think about it from that perspective. But the actual endpoints where on and off ramping happens is still a big part of the transaction, as people start to on ramp, and while the use cases for why they keep it on chain is increasing, but this on and off ramping is still a huge thing. As that kind of like evolves to wherein you're going to see more and more swaps, like how do you see your business changing to evolve this new kind of dynamic where it's less about on and off ramping and it's more about on chain transactions?
Yeah, that's a great question. I think it's like a tale of geos. Like
I like that.
where users are actually holding stables. I think like that's where everything can happen on chain without having to then be on ramped or off ramped. And like I think that's been a big focus in LATAM, right? And why that is because there's local like fiat currency volatility. People want US dollar exposure. They really are able to access that much like very easily with stables, like, versus any other medium. And then they're holding stables. And now like I think the next challenge around that infrastructure and that adoption is, how do you let people actually spend that? And I think we're getting there. We have a lot of exciting conversations. I think it's going to take some time, but I think that region of the world is actually where we're going to see start to finish things happening on chain, and then even businesses wanting to accept stables as a form of payment, and then holding, treasuries, like the stablecoin treasury, because they don't want to then have to like off ramp it to fiat and get certain exposure there. It's all about risk. In the United States, I think our financial system is much more mature. So, like that's not really a problem that you're solving. It's a much different problem, and I think it's more about the name of incentives. So if you're able to incentivize a company with speed and cost, right? So I can improve your speed and in being able to accept money, and then I can reduce your costs around accepting money payment. That becomes very enticing to platforms. And that's where we have conversations of, doing everything on chain, accepting cryptocurrency from your users on chain, holding treasuries on chain, whatever that is. I think like the user adoption piece is still a little tricky, where I think like some users are going to have to be incentivized. I think in the United States, crypto as a whole, and I would consider stablecoins like to be the best product crypto has produced so far, but they're still under the crypto umbrella. Um, people don't want to spend people don't want to spend their Bitcoin or their Solana. They're still holding it as an investment or a speculative asset. So stables are really, like in the US, are more just like a medium to be able to transact and buy other speculative assets or investments on chain. And so spending stables or spending like Solana to buy a good or service, that's, I think, going to take a little bit more time. I think the way we'll get there is through some sort of incentive. I think, again, some sort of like cost incentive, or like if you are able to give back savings to the users so that they're incentivized to spend stable coins or buy stable coins and hold them to be able to spend them. I think that's what it's going to come down to garner adoption in some of these more developed markets.
For clarification, the mesh product as a whole, right? I know there's several things under the mesh umbrella, but it's mostly a B2B2C product. Is that the right way to kind of think of it?
Correct. Like we sell to businesses, and so we power a lot of their crypto infrastructure, and it's mostly related to money movement. So like we've announced a lot of different partnerships. So like PayPal, Revolut, we power a lot of their payment products. If you're depositing cryptocurrency, like say on the Revolut, that's powered by Mesh. We do a lot of things with them there. Kalshi is another one where we work with Kalshi. If you're depositing crypto on Kalshi to make predictions, you're using Mesh's interface. We do a lot of swaps as well. So, okay, I'm a business. I want to be able to accept any cryptocurrency. I want my users to be able to, deposit Ethereum and then, make a prediction with it. We'll settle a lot of that to USDC. So those are some of the use cases that we touch.
That's so powerful, right? I mean, that is one of the you've very quickly named some of the largest names out there right there in the news cycles, and so huge congratulations to you guys. And for people listening, you guys believe in stablecoins so much that you actually accepted settlement for some of your recent rounds in stablecoins, which is definitely putting your money where your mouth is, right? So
Yeah,
that's amazing.
I mean, I think we have to. So we work closely with PayPal, and we've accepted multiple investments in PayUSD. They have a fantastic team over there. They're doing a lot. And it's cool to see a company like PayPal that's been around for so long to be pushing the envelope and launching a stable coin, launching into like 70 markets globally, really pushing their wallet as well. So, they're quite present. But Luther, I mean, we're doing other things too. Like we're making it so like eventually every Mesh employee gets paid in crypto as well. And yeah, we definitely want to, eat the food we make and back up what we're doing here.
I think it's really good. Yeah, I mean, it's validation, isn't it, of the tech that you're building, that you're actually able to use it, and you're abstracting away complexity. That's the whole point of this. That's what you're doing to make life easier. So, if you're making it easier for yourselves, isn't that the best advert for the sales? Yeah, really good, really good.
On the front where you've this public news which you've done deals with Shift4, you mentioned Revolut. When you're walking into those opportunities, just kind of give us a sense of like what those conversations are like. What is the pain point that they're expressing and saying, Mesh, we would like to work with you, partner with you, be your customer for these reasons, and just some like 2 or 3 reasons that resonates with people listening.
Yeah, I love that. And that's why I like this podcast, because like you're asking a lot of BD focused questions. So I think like other people,
it's 2 BD guys on the call.
Yeah, right. So it's like, it's great. Other people in the space can like relate to this and hopefully, get some anecdotes. But it's different. Like everything you think about around like sales, BD, I feel like it's very much related to maybe a different type of product suite. Maybe like SaaS sales, right? That's where a lot of the content is or has been up until recently. And when you're bringing a new product to life, because there was no product like Mesh before in an industry that's still very, very new, it's quite difficult. And so you're not selling and you're not working with someone, you're not partnering with someone that woke up in the morning and is like, yeah, like I need mesh. Right
Yeah.
now, maybe we're seeing that more now as we've grown larger and there's more use cases out there. But in those initial conversations, it was really more of like, hey, this is our product and what we've built. Talk to me around about your strategy in building with on chain, right? Building something with stable coins. Okay, how do we merge those things together, right? And that's how some of our products have been born as well. Like we've, there have been some large customers that had a vision and requested specific features or functionalities, and we were able to bring those to life. And then a lot of other partners found utility from that. So I think like at the basis of that, it's really innovation. How to successfully go to market like this. And I talk about this all the time. It's really about trust. So, we're like the sales team at Mash isn't making 1,000 calls a day, cold calling people. Um, we've seen very little success from a lot of different types of cold outreach, right? Everything needs to be very tailored and specific, and everything needs to be very deep because our product is, we want to abstract that complexity away, but it takes some time to really understand everything that we can do and all the different problems that we solve and be able to match that with the problems that our clients have. And so to have those candid conversations, you need to have trust in the person in front of you to really open up and talk to you so you can problem solve together. If you're just cold calling or just trying to pitch people surface level, you're really going to get nowhere. And we didn't by doing that. So especially at the start, building those relationships, building trust has just compounded over time. And then it's brought into like being able to expand on certain partnerships and do a lot more together because at the core, we had our clients' trust and we were seen as like a partner or extension of their team.
You bring up a good point, trust. And it's interesting how we have first we went from a centralized trust model, then we went to a decentralized trust model, then we came right back to a centralized trust model from that perspective. And I think ultimately we all feel better when there's somebody to call and when things go bump in the middle of the night, and we kind of deviated kind of back to this. But when you talk about trust, Gabby, with these various, and you're talking to various institutions, right? Banks on some sides, PSPs on some sides, fintechs on some sides, like just traditional fintechs. What do you use to establish the trust very quickly? Is it on the regulatory front? Is it on the tech front? Like, hey, here's how we monitor transactions. Like what are those things what are those some common talking points that you use to kind of establish the trust very early on in the conversation?
But the first one's personal trust, Luther. Like and like that's actually the first one. It has nothing to do with the product or what licenses we have.
Yeah.
You got like and how to do that as as when you're in BD, get in front of someone in person, right? When someone can interact with you in person, you're gonna have a longer conversation, and so that already is gonna allow you to get more data points from them, and them get more data points from you to help build that trust. And then it's about just showing that you're radically transparent. We've never like made promises we couldn't deliver. So it's like, hey, if we don't have this, but we feel confident that we could build this by Y date. Okay, let's do it. Right. A lot of times people don't just want to hear yes, 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 yes. They want to know the truth, and that's how you build trust. After that, I think like I think, BAM's done a great job at fundraising and getting the right investors on board. And that's been a huge help for us, especially early days, because I think like some larger partners were confident that we had the right backing. We would be around, we were doing things the right way. We had the resources to be able to support them. Now over time, I think, yeah, there's definitely a compliance component and ensuring that we have the right team. We have, things like, being SOC 2 Type 2, having the right licenses, all that stack. That's for sure. And then, and then from a product perspective, it's about seeing the product in the wild, right? It's about like, who are your partners? Who are you working with? Oh, I recognize these logos. I've been able to see, feel, and test this. Okay, like, I can translate this. I can see this applying to my business and my platform. So It's in the end, I do think it's pretty simple. I don't think it's like anything out of this world, and I'm sure a lot of people listen to it are like, okay, that makes sense. But it's about doing the basics correctly and doing it right.
Yeah, that's a very good answer. I actually wanted to ask another question because it's an extension of trust. The mesh proposition is about abstraction, making things simple for the B2B customer, for his end customers, and trying to get more money into the system. But as we said at the beginning, crypto's still really fragmented. So under the hood of mesh, you're having to tie together all of these disparate third parties that have various levels of SLA and reliability and so on. How do you keep a handle on your downstream sort of third-party vendors that you're stitching together to comprise the mesh product? How do you maintain that? Because, the client calls you, but you may need to, they don't know that the problem is with a third-party vendor potentially.
Yeah.
How do you manage that sort of dynamic? Because it's not easy, and we've all been in that situation before where a third-party vendor has let us down, and we're a bank, so it's the bank. They blame the bank, it's our fault, or whoever it was. It's always the bank's fault. But how do you manage that in this way? Because again, it's still a nascent industry, and people are not so forgiving.
Yeah, I'm sure our CTO is can relate to what you're saying. I mean, it's not easy, especially when you're building API integrations. Like at the start, it's really about this is our product and what we do. We are the best in the game at it, and we have X resources dedicated to just building this. You're not going to be able to do that. So I guarantee you we'll do it better than you, right? We can sign up to these SLAs. Here's why, and we're responsible for this. People and that resonated with clients and platforms that we work with, and they understood that. They understood the business model. They understood how our product worked. They understood that we're connected to exchanges. Here's what Mesh can control. Here's what we can't control because this is on Coinbase. But this is what we're going to do about it, and we're best in class at doing so. I think now over time with scale, we're able to actually work with these third-party providers, right? So like we're able to partner with some of these exchanges, some of these wallets, so that we can have unique connectivity. We can enhance the type of features, and of course always maintain like the best-in-class SLAs. And so like where we're just compounding on that. And then it kind of creates this network effect, and it really excites me because that's where I really think like our moat is as a business, where all the IP really sits is our ability to have unique relationships with third parties that power our product. And then we're able to offer not just connectivity, but unique connectivity that no one else in the market has and can really build. And so that's what excites me. So we have a partnership arm at Mesh that just focuses on this now.
Great answer. Yeah.
Switching gears a little bit, Gabby. Till recently, right, we all would talk about the Genius Act, but then we've come across a point where now the Clarity Act is somewhere, it's definitely more of a reality than it was, I think, a couple of months ago. And I think we've come across a very interesting compromise when it comes to the yield component tied to stablecoins. First of all, would love your thoughts on how do you feel about the proliferation of stablecoins there's so many stablecoins now, right? There's more coming down in the market. How do you feel about that? And then how do you feel about this compromise that was recently reached for the Clarity Act?
Yeah, I mean, look, in general, I think I'm definitely pro regulation. I think clarity um, is a weapon. So if institutions have clarity and have clear guardrails, then they can act on those guardrails. I think in the past, being in the space for a while now, when there's lack of clarity and ambiguity, it causes companies to freeze. It leads to lack of adoption. It leads to focus on other types of technologies and a lack of investment into building around the blockchain, and that's not good for us. So I'm really happy with the progress, especially under the current administration, that we've seen, and it's great to see even companies like Coinbase like really work hard and work closely with the regulators to help further this in the United States, and then the rest of the world tends to follow. Um, Stablecoins specifically, I think, I said it before, I really do think stablecoins are the best product in crypto, right? If you really want to think about that. Like, I think money should move like data, should be like instant and move globally. I think stablecoins allow that. In terms of like proliferation and everyone kind of issuing and launching their own stablecoins, it's not a surprise to me. I think it will continue to happen over time. It's a really interesting business if you're able to issue stable coins and then like make money off the yield. Like that makes a lot of sense. Where there's a moat in the stable space, I don't think it's really around product. It's more around distribution. You need distribution. And then you need to be able to protect that distribution. And like Tether has insane distribution. I don't really see any regulation slowing Tether down. I think they're so big, and I have a lot of respect for Paulo and even Marco and like what a lot of their team is doing that um I think they're going to continue to figure it out. I think they're going to continue to expand, and a lot of the moat that they have is in these regions, in these emerging markets where there's a lot of volume and there's a lot of demand for, you know, a dollar-backed currency or dollar-backed asset. And um, so it's going to be interesting. It's going to be like, I think Circle is well positioned. We work with we're really close with the PayPal team. They're doing a lot to increase their overall distribution. Work with other issuers and platforms as well. I think it's really exciting. The most interesting, I think, occurrence is going to be when some of these banks, like when JP Morgan maybe launches a stable coin, or Bank of America, and how that's going to impact the space, and what distribution they're going to be able to get outside of their own ecosystem. But I think overall as a business model, it's very appealing, and I think it makes a lot of sense that we're seeing more and more stable coins come out.
Yeah, and from a opinion perspective, I feel like we kind of won. We kind of won as a industry, knowing that ultimately the way that the Clarity Act is somewhat forming and probably will go to the floor for a vote is ultimately gonna drive, to your point, adoption versus just holding, right? Actual activity versus just buy and hold kind of functionality or behavior. So I think I feel like this could have been the best of like both worlds. Rami, would you agree? I mean, you're a former stablecoin issuer yourself. Is that kind of how you look at like the latest headlines there?
Yeah, no, I would tend to agree with that. I think what we want, and we need to remember that we're still really nascent. This is still like stablecoins have only really, I don't know. I've been in it since 2022 officially and a little bit before, but 2022 people hated stablecoins. We don't forget that like they were really not liked as a digital product, and people were pushing CBDCs and tokenized deposits, and really it was only around 2024, 25 that stablecoins got with the new administration where they got that sort of credibility push. So we're still really early. We're only like 2 or 3 years into that cycle of adoption. And to Gabrielle's point earlier, America has a banking system that works, so like stablecoins as a product outside of the crypto bubble is sort of not that relevant at the moment. People can Venmo money to people. People can use PayPal. You don't need to use PayPal dollar to move money within America. It doesn't serve a purpose at the moment, or it doesn't. The efficiency gains are not really that noticeable in those markets. Where they are solving issues at the moment is exactly where Tether's sort of got the distribution. It's where there's a problem to be solved, and that problem's either inflation or banking systems that don't work or money that costs a lot of money to move and loses money and all that kind of thing. And that's where the innovation is starting to happen. So where I am excited, and I agree with you, where, we've got a good clarity, if you pardon the pun, is that this should improve adoption. And with firms like Mesh sort of at the helm, you mentioned the Rolodex of customers that you've got, Coinbase, Revolut, all the major players that are going to basically spread crypto adoption it's all converging. Finance is all converging. This is the exciting thing for me now, because Tether has a ceiling. The ceiling is sort of the unbanked, the people who can't access the financial services ecosystem. America's the opposite. America is just this massive market, hundreds of millions of people that don't need crypto necessarily, but could benefit from being inside a blockchain-based world. And these are the baby steps to getting them on chain. If Mesh helps to drive that, and Coinbase helps to drive that, and Revolut helps to build hundreds of people, so we're actually on chain, moving money on chain, that's pretty transformational. That's very exciting, and that will help GDP, and it'll have lots of compounding benefits. So I'm excited to see how that happens. But as Gabriele said, regulation is this asset. This is the weapon, and that's what drives adoption. So 5 years ago, I was in New York, with an NYDFS trust license. It wasn't enough. You needed federal regulation, and that's not to say New York regulation wasn't good. It was good. We had a charter and the rest of it, but it needed federal level collaboration for us to start to get a real impact in the US. So, and where the US leads, the rest of the world follows. So it'll be exciting.
Yeah.
Yeah.
You make some great points. I think Tether, they made a great bet. If you think about it, they kind of saw the future, went where no one was looking, and then really got this distribution in emerging markets, and we're like, you guys are gonna want this. You're gonna want U.S. dollar exposure, and they got it right. And I think what's cool about stablecoins is, if you think about the early thesis of Bitcoin, stablecoins really do kind of bring that real world application of making it easier to move money globally. But it's happening with stables on chain. It's not really happening with Bitcoin. What I'm really curious about, and I'd love to get both your takes on it, is what's the next iteration of this? I think some of the pushback I've seen is okay, all the stable coins that really are getting a lot of volume, they're all US dollar backed. And so, we're still reliant on the US economy. But I've seen, you've seen Tether, they came out with, a gold backed stable. And there's some of these products emerging. So do you guys think that we'll ever see that pick up, and people globally are just holding gold backed stables, or are people going to gravitate towards Bitcoin because that's more so seen as the digital gold? Or do you guys have an opinion on that? Because that's something that I've been tinkering on and thinking more about, is what's going to be that next wave of adoption.
Really good. Firstly, I think it's also very funny that the best product out of crypto ended up just being a tokenized dollar of what we already had. So that's sort of extremely ironic when I thought the whole world was made decentralized. But you're right. I mean, the best product we've got is dollar exposure. And I think that's still going to be predominant, because even though, the dollar has issues, it's still the best of all of the currencies at the moment. And, I say this has been a former sort of Japanese yen stablecoin. Again, there was no adoption in Japanese yen stablecoins sort of a few years ago, but it's now starting to pick up. And again, regulation is the key. There's now regulatory clarity, and the banks are starting to use potentially pricing tokenized bonds, and that's going to drive the yen. Euroland, there are now a few Euro stablecoins. I mean, EuroC has been the most dominant one, but now there's syndicates of banks that are trying to do their own stablecoin. I'm based in the UAE. That's got a really progressive crypto ecosystem at the moment, and the laws have been really interesting. So there's been the launch of 3 or 4 different AED stablecoin projects, which I'm really interested to see, because they're pegged to the dollar, but it's basically a proxy dollar. So, where you can't deal with the dollar for political reasons, but you still want exposure to the dollar, this could be the product. And I'd say the same thing about Hong Kong. Hong Kong also has this sort of mix of good regulation, proximity to a really international trade corridor through China, with a dollar-pegged currency in the Hong Kong dollar. So those are the ones that I'd be looking at. So weirdly, the iteration of the dollar is just proxy dollars. I think that might be the next stage. There's dollars by another name. I do think there will be a growth in sort of precious metal stablecoins, so silver, gold, and also I don't know, Luther, if you remember, we had Chris Perkins on a couple of episodes ago, and he was saying, and I've read something else about this. It came up again where people are saying possibly compute. With all the AI stuff that's going on at the moment, there may be stablecoins where compute is the currency. So I'm interested to see what
right?
happens.
Yeah.
So I think it'll take time, but yeah, I think at the moment people still need dollars. There's this massive demand for dollars, so I feel like it's just going to be dollars or dollar equivalents, by other names. That's going to be the next iteration of growth. I haven't seen how euro, we both all come from FX world. Well, at least myself come from an FX world, and we know that this is not the right balance at the moment. Like, at the moment, historical trade is 60% dollar, 20% euro, 10% yen, and sterling and other currencies are more significant than what's being represented in stablecoin land at the moment. But I think because of what we talked about earlier, because the adoption has happened in places where access to dollar is really important, and that's just a game changer. That's why there's this concentration towards dollar, I think, at the moment. And maybe that will smooth out over the next few years, but I think it will take a bit of time. What do you think, Lisa?
No, I think you're spot on. I even before we have these commodity-backed stablecoins, which there are a few, by the way, Gabby. Like, we actually had a guest a couple of weeks ago, where he's working in Latin America with wheat-based stablecoins, soy-based stablecoins, and something else, right? So like true commodity, like these are like not just gold, but like actual farm, agricultural commodity backed stablecoins, which I thought was fascinating. And he has like, I think, almost 200 million or 300 million in volume that he's seen already using that, right? Which is fantastic, not a trivial number. But I think what we'll see is US dollar stablecoins, more proliferation, but then there's a need for non-dollar stablecoins. And in my view, the best transaction is, money comes in through some RTP network, right? So it's 24/7 through that, lands in some US dollar stablecoin, traverses the borders using US dollar stablecoin. It lands in another non-US country, gets converted to a non-US dollar stablecoin, and then if need be, traverses in an RTP on that side. Like, this is like the best scenario for a transaction, which could truly happen 24/7. Everything is as instant as possible, as real time as possible. But I think the unfortunate nature is that most of the world doesn't have RTPs or doesn't have local stablecoins, so that's kind of where we are.
But we're seeing that, though. One interesting corridor is dollar mex, like USD Mexico, I think, is one where we're starting to see that. And
they have a RTP on their side.
Yeah. They have an RTP. And Brazil, of course, dollar Brazil is probably an interesting corridor as well. But it's starting to happen.
Awesome. As we start to wrap up, Gabby, where can people find you?
You can find me everywhere.
Wow, omnipresent.
Yeah.
The omnipresent Gabby.
The best place is LinkedIn, so just look me up, Gabriele Galli. I work at Mesh. Happy to connect with anyone on LinkedIn.
It was a pleasure to have you, Gabby. Look forward to having you on the next show.
Thanks, guys.
What you've heard today is that the stablecoin race isn't being won at the issuance layer. It's being won by whoever builds the cleanest, most connected rails between the users and the merchants. And Mesh is absolutely providing that by closing deals with 900 million users and partners across the board. If you're an institution thinking about where you fit in the stack, share this episode with your payments and treasury teams. This is the infrastructure conversation you need to be having. Like and subscribe wherever you listen, and we'll see you next week. Before we wrap up, a quick disclaimer. The opinion expressed here are those of the hosts and the guests and do not represent the views of their employers or affiliated organizations. The conversation is for educational purposes only and should not be taken as legal, financial, or investment advice.